You are listening to Investing Matters, brought to you in association with London South East. This is the show that provides informative, educational and entertaining content from the world of investing. We do not give advice, so please do your own research.
Hello and welcome to the Investing Matters podcast. My name is Peter Higgins and you can find me at Conquest3 on Twitter /X. Today I have the huge privilege of speaking with Michael Hewson, the award-winning Chief Market Analyst at CMC Markets. CMC Markets is a best-in-class multiple award-winning platform for committed CFD and spread betting traders. With over 30 years of experience in the financial markets, Michael is respected for his candid and direct market commentary. He's a well-known face on both financial and mainstream TV, appearing regularly on BBC News, Bloomberg, CNBC, CNN, Fox Business, and several other outlets across UK, North America, and the Middle East. With his background in FX trading, Michael has spent 6 years trading currencies with particular emphasis on charting and technical analysis. Michael has delivered several seminars on trading and technical analysis at the World Money Show, London Business School, London Stock Exchange, and he holds an MSTA for the UK Society of Technical Analysis, amongst other qualifications as well. Michael, I've given you that full introduction. I hope I didn't bore you, because it's important to choose wisely who we listen to. And I want our listeners to listen to you with regards to trading and investing, because you're globally recognized as one of the best at what you do. And you've got 30 years of experience behind you, and you're at the top of your profession. So thank you ever so much for joining me.
That's my pleasure, Peter. And thank you for inviting me on.
Thank you. Right, we're going to start right at the very beginning here. We're going to go back to you being a little toddler. I'm going to start talking about your early money experiences, Michael. Started to earn your first bit of money on your own. What was the drive behind that at such a young age?
I think really it came from my parents. I think they wanted to instill in me that you don't get something for nothing, that anything you want to achieve in life, you have to work for. And while they were quite happy to pay me pocket money up to the age of 10 or 11, once I went to middle school, as it is called now, they wanted me to learn the value of money. So I went and got a paper round at the age of 12. I think it was £1 a week, which gives you an indication of how long ago it was, showing my age a little bit. But I did that for around about 5 years, did 6 days a week. Didn't do Sundays. Sundays was just too heavy a bag to carry, because you had all the supplements, you had all the magazines and pretty much everything else. And I think, when you're 12 or 13, I think you deserve a lie-in at least 1 day a week. I mean, let's face it, I'm, nearly 60 now, and I still think I need a lie-in 2 days a week on the Saturdays and Sundays. So no change there.
Fantastic. I love that response. Thank you. And you continued working when you were doing your O-levels and A-levels. How many O-levels and A-levels did you attain, Michael?
Yeah, I mean, I got 7 O-levels. I took my English O-level early. I took it in my 4th year, not my 5th year, because I felt that I would be able to pass it. I was told in no uncertain terms that I wouldn't pass it, which was really great for your confidence. But I've always been one of those people who, well, I'm not really that interested in what other people think of me. I'm more interested in what I think I can achieve. Having said that, I did suffer from some self-esteem issues, really shy and what have you, but I still felt that I was capable of doing it. So I insisted on taking it and I passed it, which meant that I had 1 less O-level to take in my 5th year, and allowed me to focus much more on mathematics, which was a little bit of a weak point for me. But as you can see from where I am now, it certainly wasn't an obstacle. And that was consequently as a result of hard work. And then I went on to do A-levels. And again, here, I took on a Saturday job working at Waitrose. Again, my parents said to me, look, if you want to earn a bit more money than obviously I was getting more than £1 a week by then for my paper round. But I realized that obviously I wanted to earn a little bit more money and save a bit. So we walked into our local Waitrose, me and my dad. And my dad walks up to the manager and he said, Hello, sir. My son's studying for his A levels, but he'd like a sort of a Saturday job. Do you have any vacancies? Well, as a matter of fact, sir, we do. But you have to do 1 weeknight as well, and it can be either Thursday night or Friday night. So I thought, well, 3 hours on a Thursday, and then 9 till 4 or 8 till 4 on a Saturday. Yeah, I can do that. So I did a Saturday job while I was studying for my A levels. I got two. Had the option to go to university. Pretty much all of my friends were going, but I don't know what it was about going to university. It just didn't really appeal to me. I think I'd probably had a belly full of being at school. I think a belly full of sort of being bullied, because I was bullied quite a lot during school because I really had to work to get my grades. I'm not what you might call, naturally, I'm not going to say naturally intelligent, because that's not right. I think I am fairly intelligent, but nothing ever really came naturally. I wasn't one of these people who could swat the night before and then just breeze through. Yeah, it required an awful lot of graft on my part. So, I weighed up a few options, and once I decided what I was going to do, I'd really decided that I didn't want to go to university, and I wanted to get some sort of job.
No, thank you for that reply. I'm sorry to hear about the bullying, and I always think those that bully youngsters at school or in colleges or even the workplace, they tend not to be the ones that actually achieve the best outcomes in life. So I look at you now, and I think, those bullies are looking potentially at you and going, yeah, wish we hadn't done that. So kudos to you for just persevering and applying yourself, mate. Well, very well done. So your second job, essentially, or third, paper round, Waitrose, third job, Natwest Bank. Why Natwest Bank and not Waitrose? Or
it was a choice. It was very much a choice. It was either retail, and I went to Waitrose head office, which I think at the time was Devonshire Square or Cavendish Square or somewhere in London. I can't remember now. It's such a long time ago. And one thing I will say about Waitrose and John Lewis partnership, even if you're working part-time with a Saturday job, they still invest in you. They send you on training courses. And I went on a number of training courses with Waitrose, because I think being an A-level student, and they had quite a few A-level students working on the Saturday floor. A lot of them were in my year at school. So I got a job there, and I thought, oh, that sounds quite good. And we were discouraged from doing it by our headmaster. He thought that it was a distraction. But for me, I felt that it was a necessary part of preparing myself for the world of work. Whereas he just wanted everyone to go to university and be an Oxbridge candidate. Well, with the best will in the world, not everyone is an Oxbridge candidate, case in point, but that doesn't necessarily mean that you write yourself off. I know an awful lot of Oxbridge candidates who haven't got an ounce of common sense at all, or what I would call streets, perception, soft skills, whatever you want to call them. I think they are just as important. So gone off at a slight tangent, but it was either that or I got myself an interview with Natwest Bank. I had the choice, decided to go with banking. I was probably more familiar with that, and decided that retail, while it was quite appealing, I didn't really want to spend all my day on my feet. And one thing I will say about working in Waitrose, you're on your feet all day, rushing around, stocking shelves up. I was in charge of the drinks aisle, so that was always very, very busy. People coming in, buying crate loads of Coca-Cola, I should say, before anyone says anything else. Not the white powdery stuff, lemonade, and all of that sort of stuff. But it was very, very tiring, and I thought that that's not to say that I wouldn't have had a good career there. They had the old cash registers, and I worked on the tills. But it was quite difficult on my back, particularly my body, because when you were on the tills, and I'm rambling a bit, in the old days, you basically had to take the stuff off the shelf yourself and pack it like that. So you're doing that all the time, all day, and it just ruined my back. So it's a rather stupid reason, but I decided to go into banking.
No, and you made the right choice there. You when we had a look at what you did there, you learned multiple skills there as well, and you even took evening classes to get some certain qualifications and other skills, like you say, additional professional skills
and I think
whilst there.
I think that's important, and I think this is something that I actually feel quite passionately about. There is too much emphasis on students and pupils nowadays to go to university. You do not need to go to university to have a good long career. You have to be adaptable. Vocational skills are just as important. And the good thing about the vocational skills is that the company pays for you to take the exams. So you don't burden yourself up on debt. And I think that's very, very important. I think, you know, going to university for the sake of university benefits nobody. And I may be a little bit old-fashioned in that regard, but it's something that I passionately believe it, because ultimately it dilutes the value of a degree if everybody goes to university, because you're no different to everybody else.
Very, very good point. Very well made. And you're a absolute signature for that, given what you've achieved. So I want to talk now post NatWest. I'm going to go all the way up to just prior to joining CMC. So we're going from 1985 at MHT all the way through, and a few crossroads as well, just to give us a synopsis of that. You know, 20 years, mate, of your career path, life journeys, etc. And let's just condense that down. I want to hear as much as I possibly can regarding the different things that you learned and skills that you attained as well.
Well, I think more than anything, I think you have to persevere at things. But I think one of the things I learned very early on is not to settle for something that I don't have a passion for. And banking, well, I started out in domestic banking, it was retail banking, it was branch banking. And it was just boring. It just wasn't for me. So 1984-85, I wrote around about 50 or 60 letters to various investment banks in the city, asking them if they had any jobs in foreign exchange, because I knew a couple of my friends had got jobs in that area, and I thought it actually was quite interesting and quite exciting. I got 2 replies back. 2. One was from MHT, Manny Hanny, which is now JP Morgan. And they offered me a position working in the back office in Stratford in East London, as it was then. That is the back office. I mean, obviously Stratford East London is still there. I'm not sure the back office still is. And I spent a good part of 3 years there, learning all about Nostro reconciliations, settlements, cash payments, confirmations, balancing currency accounts and what have you. Moved on to Bank of Boston because they had a policy of promoting from within, whereas Manny Hanny, it was very much hit and miss, and I wanted to get a move on. And I was in the back office at Bank of Boston, and I got a call. But actually, it's a funny story. Let me tell you about it, because the way I got my position at Credit Anstel was completely out of the blue, and it stems from my time at MHT. I was coming back late one night from doing overtime in Stratford, and I was on the train, Caterham train it was, on the way back from London Bridge, late at night, dozing off a little bit because I was tired, as you would be at that time of night. And I overheard 2 people talking in the compartment next to me. And I could tell from the nature of their discussion that they were talking about currencies. And I deduced that they worked on the trading floors of major banks. And one worked for Swiss Bancorp and one worked for Credit Anstel. And the guy from Swiss Bancorp, I can't remember his name, but he was the chief dealer there. He had a cardboard box in his hand, and he had a plant in it. And he got up to get off at Purley, and the bottom started to fall out of it. And I went, excuse me, mate. Thank you very much. He got off the train, and the other guy, the chief dealer at Credit Anstel, he stayed on. And he laughed and thought it was quite funny, and we got chatting, and he told me that he was the chief dealer at Credit Anstel, and I told him a bit about myself. And I only had one stop to do this because I was getting off at the very next stop. So as a sort of a final remark, I said, "You got any vacancies?" You know, and I just can't, I heard myself say it and I automatically thought, God, why did I say that? And he goes, well, actually, no, I haven't, but give me your number. And if I have anything turn up, I'll let you know. Anyway, 6 months goes by, I get this new job, working in Bank of Boston settlements. And I was sort of thinking, you know, I need to get a job on the trading floor. You know, this is really what I want to do. And 6 months later, I get a phone call completely out of the blue, and it's the chief dealer of Credit and Stout. And he said, Michael, got a vacancy. It's just opened up, junior position, working at Credit and Stout. Are you still interested? And I went, hell yeah, absolutely I am. Yeah, okay, so when can you start? Would you be prepared to start 3rd of January, 1988? And I said, yes. And that is basically how I got my first break working on a trading floor in the city. And the moral of that story is, don't be afraid to ask the question. What's the worst that can happen? We'll just say no and tell you where to go.
Fantastic. I love that. So you get your dream job. You're on the trading floor, or near the trading floor, should I say, with the guys that are and ladies that are on the trading floor. 89 to 93, CBA, junior dealer, FX dealer. Continue on from there for me. Fantastic.
Yeah, I mean, worked obviously only lasted 11 months at Credit and Stout. They made some cutbacks, but one of the guys at Credit and Stout put in a good word for me at CBA, got me a job round there as a junior. Best working experience of my life working at CBA. Massive learning curve, but Credit and Stout was an even steeper learning curve. Unpleasant in a lot of ways, because they don't take any prisoners on trading floors. As a junior, you get abused, you get shouted at, and they do that to see whether or not you can cope with it, because it's a really high pressured environment. And if you can't cope with it, you leave. And I did cope with it. It was a struggle. I'm not going to lie, but once you get immersed in it and everything clicks into place, it is an absolutely great place to be. The camaraderie is really good. Probably much more of a split towards boys rather than girls, which makes it a very toxic environment, I think, if you're a female. One thing that I will say is that things have improved an awful lot since then for women. I think back then it wasn't a particularly nice place to work. Now it's an awful lot better. But yeah, I did 4 or 5 years there. Really enjoyed my time there, and was really upset when I got made redundant at the end of 1993. But I didn't feel sorry for myself, even though I felt really resentful.
Then you got your job at Trader Made.
That is correct. Yes. I mean, I was basically looking for a job. You know, I signed on. Worst experience of my life. You know, it's not something that I wanted to do, but I had a mortgage to pay. I had bills to pay. You know, so you do whatever it is you need to do to get by. And I got a call out of the blue from this guy from TraderMate who'd actually demoed a product to me when I was working at CBA. And he asked me if I was interested in a role as an account manager, teaching technical analysis and trading and what have you to TraderMate clients. My first interest in technical analysis came around as a consequence of my time at CBA. There was a big focus on technical analysis there, on risk management. And I think that's really at the core of everything I do. I think it's important to remember that whenever you're trading or you're investing, the two are totally, completely different mindsets. You invest for the long term, but you trade in the short term. So if you're trading in the short term, you are really concerned about where the price is going to go over the next 5 minutes, 15 minutes, 30 minutes, or however long. If you're investing, it doesn't matter, because you're investing for the long term. You know, if the price drops 5, 10% in the next 5 to 10 weeks, who cares? Because you're holding that for 1 or 2 years, 3 years, 4 years, or 5 years. It's about long-term returns as opposed to short-term returns. So you have to basically create or compartmentalize those two parts of your brain. when you're looking to invest and when you're looking to trade. And that's an important distinction. Technical analysis is used for managing risk, but also for timing and for determining a trend up, down, or sideways. And there's only three options. You only have to deduce whether or not to buy it, sell it, or stay out of it. There is a third option, sit on your hands. That is an option. You'd be surprised how many people think that it's not. But some of the best trades I've made have been the ones that I haven't put on. Because if I had, they'd have lost me money.
We're definitely going to cover more on technical analysis and risk management later on, but thank you for sharing that. You got some qualifications whilst you were with Trader Me as well.
Yeah. First year, it was a prerequisite of the role that I had to take the STA qualification, and I sat that at South Bank University.
Okay, just expand for those that don't understand what the STA qualifications are, please.
Society of Technical Analysis. So essentially, what that is it says that you satisfy the qualifications and their standards for being able to mentor people in the art or skill set of technical analysis. And for me, it's a discipline. It's a discipline. Trading is a discipline, but also technical analysis is a discipline. And essentially, it's the analysis of price. Nothing more, nothing less. And that generates quite a lot of skepticism from the academic community. Economists, teachers, and what have you, because they somehow think that you need to understand the fundamentals, you need to have an in-depth knowledge of balance sheets and accounts and what have you. And I do, because as part of my banking exams when I was at NatWest, I did accounts, I did banking law, I did elements of banking, I did economics. So I have an understanding of all of that. But at the end of the day, none of that matters if you think the market should be going up based on your economic analysis and it's not, it's going down. And me as a technical analysis, I try and strip away all of the fluff and just focus on what's in the price.
Absolutely. We're going to get into that a bit later on as well, Michael. Now, I wanted to talk now because you're in the office. Everyone see you in the office there. You're at CMC Markets. We're going to talk about CMC Markets now. You get there in 2006. What was your first role, initial role, and how did that job come about? And what's happened and transpired since then? Share with us a bit about that, an overview of the company as well, please.
Well, CMC Markets actually took over Digital Look in May 2007. I joined Digital Look in 2006. So, depending on how you view it, I was at Digital Look first, CMC second, but ultimately CMC just subsumed all of Digital Look. How did I get to Digital Look? Well, coming towards the end of my time at TraderMade, I was a little bit adrift, shall we say, career-wise. I was no longer an account manager, a sales manager. I worked my way around the company doing all various different types of job, network administration, PC support, product testing, testing new products, making sure these technical analysis products worked quite well, feedback towards the developer and what have you. And ultimately, I just didn't really know what I wanted to do. It was a very small company. Great if you want to learn a wide range of skills. I became a Microsoft certified professional. So there wasn't anything that you couldn't tell me about building a PC, stripping it down, putting it back together, and then installing Windows on it. I can do all of that. And makes you, puts you in big demand with all your friends whenever there's a PC problem, which is a bit of a mixed blessing. But I digress. Anyway, got married. During that time I was at TraderMade, and you would have thought that I'd have been happy, but I wasn't. My wife walked out on me in 2004, wasn't particularly happy with the role that I was in, managed to engineer voluntary redundancy in 2006 and decided that I wanted to have a clean slate. And I had a long chat with a very good friend of mine, and he suggested that, what do you know best? I said, well, product manager, relationship manager, that sort of thing. So I started applying for roles and came across this ad for a company called Digital Look, which I had multiple interviews for. So I spent the summer of 2006 watching the World Cup. I met my girlfriend and now partner at around about the same time, spent most of the summer on her sofa watching the World Cup. And then in August 2006, I started work at Digital Look, and then we got taken over by CMC Markets in 2007. So I spent most of my time on the Digital Look side of the business writing commentary. But I also got involved a little bit in the product development of their market data products because of my expertise as a trader and what have you. So it was a bit of a cross section of skills, if you like. Obviously, my trading background made me an ideal candidate to try out all the market data products that they were looking to sell to investor relation websites and that sort of thing. But also, I'd learned to be able to write content, and I had a very good mentor at Digital Look, a guy called John Harrington, who now works at Proactive Investors. And I don't know whether he's retired yet, but he basically ironed out a lot of the shortcomings in my prose, shall we say, my written prose, and went from product manager at Digital Look to helping out with the new platform here at CMC, the current platform that you see right now. A lot of what you see in the charting on the CMC Spreadbet and CFD platform is me, in terms of helping to deliver that, test that, and make sure that it's fit for purpose. And then the financial crisis came around, and they wanted someone who could write content, and I fitted the bill, and I started to write content post 2008, 2009, 2010. And when the other analysts left, I just slowly moved into the roles they vacated. And here I am.
So tell us about your the full scope of your role then as CMC's Chief Market Analyst, and tell us the breadth of that, because that's a significant role.
It is a significant role. I mean, if you had to condense it down into just the content side of things, it would probably be a fairly narrow role, because ultimately what I do is I write the content for the website. I write the content that goes within the platform. So the news stories of the day that are current today. I wrote a couple of comments for Netflix and Tesla's results, which I published, and managed to get me an interview on Sky News earlier this morning, talking to Ian King. So that was good. And that's essentially part of the role. It's basically making everyone aware of the CMC brand, expertise in terms of markets, but also educating clients in how to manage risk. For me, I think this is very important, and it's at the core of everything that I do. I want our clients to succeed. I want our clients to make money, because if a client succeeds and a client makes money, he's with you for a long time and he keeps trading. You know, it's about longevity. It's not about, it's about capital preservation and then capital appreciation. Okay. The two come together, and that is so important for me. I think if you can encourage clients to take a risk-based approach to their trading, then they're less likely to blow their accounts up. And that's what I hope to achieve in all of the stuff that I do, my weekly updates to clients by YouTube, talking through what's coming up, what's happened, try and explain the relationships between bond markets, equity markets, commodity markets, how they all push and pull against each other, currency markets as well. Obviously, my key competency is currency trading. I used to trade dollar yen, did a bit of cable as well, but also have some experience of trading Australian dollar. But the lessons I learned at CBA are still with me now, in terms of when I took my first steps in learning about technical analysis. It's risk management, risk management, risk management, thinking about your entry point, thinking about your exit point, but not just about that. It's about, once you put the trade on, not only, what's your stop loss? Where's your take profit? So many people obsess so much about, where do I put my stop loss, assuming they even use one. They never think about, how much money do I want to make on this trade? What's my upside? It's always about, well, what's my downside? How much can I afford to lose? And it's never about, what am I looking to make on this? So it's about trying to make them think of the market in a slightly different way and being very aware of the risks. And there are.
Absolutely agree.
My biggest
Absolutely
lessons haven't been my successful days. They've been when I've been absolutely slapped across the chops by the market. And it's how you react to those negative days that sets you apart. It builds resilience, because you have to accept that as a trader, as well as an investor, you're going to have losing days as well as winning days. And it's how you're able to cope with that determines your longevity.
Absolutely. I agree with you. And I think you've said something there about looking after the clients, I think is really, really important. And I think you've answered this question already. I was going to ask, last year, CMC won the award for Best In-House Analyst at the Professional Traders Awards. And my question was going to be to you, what do you and your team do that's something extra special for the clients? And clearly that's why you won those awards. And
it's that.
It was the third time in 4 years that you've done it. So you must be doing something special there.
It is precisely that. It's also making myself available to our clients. So if they want to sit down and chat to me about the markets, obviously I can't give them trading advice. I can't say, well, you should buy here, you should sell here. But I tell our account managers, if any of your clients want to come in and have a chat to me, I'm more than happy to sit down with them, and talk them through about how I approach the markets, doing events around the country, doing those weekly, sort of videos on YouTube that I do every week, the monthly webcasts covering non-farm payrolls that I do, where I talk clients through the numbers, tell them what I expect to see, what is likely to happen if a certain set of numbers come out, and what, where I think the market is likely to go in the event such a scenario plays out. For me, without clients, CMC, is not going to be the successful business that it is.
Mm-hmm. Right, Michael, I'm conscious of the time. I've got loads of questions. I'm going to ask you to put some quick fire replies to these questions for me. I'm going to start with, please can you share with us the layman's explanation for fundamental analysis, followed by that of technical analysis, please?
Sure. Fundamental analysis in a nutshell is basically price earnings ratios, EPS, dividends, study of balance sheets, profit and loss accounts, economic fundamentals like GDP, industrial production, all of the macro stuff. So I would call that the macro data, very much economically data-driven analysis. It can be a company balance sheet, it can be a set of economic announcements, numbers, non-farm payrolls, all of that sort of stuff. Okay. Technical analysis is the study of one data point, not multiple hundreds of data points. Price. Is the price going up, down, or sideways? What drives that price? Well, what drives that price is all of the macro stuff that I've just outlined with respect to fundamentals. An awful lot of those fundamentals will push and pull and push and pull. Which of those has the greater push or the greater pull? The only way that you can really tell that is the fundamental lesson that you learn when you first study O-level economics or GCSE economics: supply and demand. Supply and demand is what drives price. So, the more supply you have of something, the price drops. The more demand for something, oversupply, price goes up. Technical analysis is a study of price. That's it, pure and simple.
Okie dokie. So we're sticking with price and charts and price action. Please explain support and resistance for our listeners, please.
Okay. A support level is an area of the market which has seen the market rebound and go higher on multiple occasions. So on a scale of between 10 and 90, if the market goes from 10 to 30, back to 20, and then goes up to 40, and then falls back to 20 again, that is a support, because the initial move back down from 30 to 20 was prompted a rebound. So there was a point there whereby demand started to outweigh supply and pull it back up again. So it'll be a previous low in the market on a price point, which is a support level. Flip that on its head for a resistance level. If the price goes up 10 to 40, comes down to 20, goes back to 40, comes down, that 40 becomes a resistance, goes up, goes through 40, up to 60. That then becomes a resistance. If it comes down to 40, that previous resistance now becomes support.
Bingo. Brilliant. Now, so regarding the technical analysis side, you've also got exponential moving averages and simple moving average or standard moving averages. Difference there, and why the nuance?
Okay. I would urge anyone who's new to technical analysis not to get too hung up on moving averages. Okay. Moving averages are trend following indicators. A simple moving average is essentially an average of open, high, low, close of an individual data point. Now, a data point can be a daily bar chart, and a daily bar chart consists of the open, high, low, close of that particular day. A one-day moving average is a line chart by any other name. So in essence, what you're doing, if you've got a 20-day moving average over 100 days, you're taking the average of the last 20 days and assigning a value of and dividing it by 20 to give you that moving average. So they are in essence trend following indicators, and moving averages only work when the market is trending. They don't work. Moving averages don't work if the market is just trading in a range, going from 10 to 40, 10 to 40, 10 to 40, 10 to 40. They'll chop you out. So for me, moving averages are all well and good if the market is ranging and you decide that they accurately reflect the nature of the market that you're looking to trade. The most important things for me for technical analysis, right? And I break these down into indicators. A moving average is a secondary indicator. In the same way that an RSI and a slow stochastic is a secondary indicator that goes underneath the chart. They are all lagging indicators. They lag behind the price. The most important component, and we've talked about it, is the concept of trend, up, down, or sideways, support and resistance, which we've covered, and trend lines, which basically link the lows in an uptrend and link the highs in a downtrend. Anything over and above that, learn the basics first, get comfortable with them, and then come and talk to me about moving averages, because moving averages, if they're set incorrectly, can give you false positives as to what the price is telling you. The price can be telling you it's going up, but the moving average could be telling you, well, actually, it could be about to go down. But it depends on the value of the moving average, whether it's a 10-day moving average, 20, 30, 40, 50, or 200. That requires skill, and it also requires an awful lot of patience and analyzing hundreds of markets over years. It's not something that you can learn overnight.
Brilliant. Thank you for that response. Now, Michael, there's been historically people that have been dismissive of technical analysis, and they've been naysayers, and they don't fully understand it. So what is it that they're missing with regards to, they're investors, so they're not traders, but essentially it could enhance their performance regarding their long-term returns for investing, maybe, if they understood it more?
Yeah, I mean, I think in terms of investing, moving averages are useful because they will identify a long-term trend. So they will basically tell you what the long-term trend of a particular market is. You know, and I'm talking specifically about 50-day moving averages and 200-day moving averages, because essentially, if you're an investor, you want to know if a particular market that you're invested in is in a sustainable upward trend, or whether or not the price is moving so far away from the actual underlying long-term mean which I designate as being the 50 and 200-day moving average, and whether or not it's due a pullback. So I think they're important in that context. Now, if people are dismissive of it, that's their problem. I'm not going to try and convince them otherwise. If you're a skeptic, you're always going to be a skeptic. But not for nothing, do hundreds of thousands of banks worldwide invest huge sums of money in technical analysis programs. They design complicated macro models to try and tell them what the market is going to do next. They wouldn't be throwing all that money in it if it was akin to reading tea leaves. There is an element of skill to it. I would prefer if people were closed-mouthed and open-minded about it rather than the other way around, because I don't dismiss fundamentals. There are an awful lot of very good economists out there, but you'll also find that an awful lot of the economists who are dismissive of technical analysis aren't particularly good at the fundamentals either. You know, there's the old joke about you put a dozen economists in a room and you come out with 20 different outcomes. Well, the data is the same. It's exactly the same. So how come you don't agree on it? Technical analysis is no different. At the end of the day, it's down to the skill of the individual investor and the individual trader. You're not going to get every piece of money out of a given trade on any trade that you put on. But hopefully, if you're good enough, you'll be able to pick up some.
Brilliant. I love that response. And you touched on the importance of risk management as well. Can you expand on why that's a core component of actually surviving and being successful long term, please, Michael?
It's down to market timing. I think one of the things that I learned very early on is you can be right about an overall direction of a market move, but your entry level can be wrong. And that's why it's important in the context of trend lines. Technical analysis allows you to look at a market, draw a trend line underneath an uptrend, and know instinctively that you shouldn't be selling this market, because if you're selling into an uptrend, you're going to lose money. So you need to flip your mindset. If this market's going up, I need to be looking to time a trade to buy it. A trend line will allow you to do that. You don't want to buy the market near a long way from its uptrend line. You want to wait for the market to come back towards it, time your entry in, put your stop loss below the trend line far enough away that it doesn't flip through and then take you out, and then ride the move higher. So it's market timing. It allows you to time the market by looking at the data in front of you, putting a trade on, and allowing you more control over when you get in and out of the market. Now, you may think, but I know this market's going up. Yeah, you may be right. But what happens if you buy it up here and it drops all the way down here? Are you still going to be as convinced then that the market's going up? Whereas if you'd waited for it to come down there and bought it there, you'd have a lot more room to run your loss than if you bought it up there. And that's the key, patience. And that's what technical analysis allows you to do, time the market better. You're not going to time it to, you're not going to be able to fine tune it. Many's the time I've sold at the bottom and bought at the top. We've all done it. Markets have a habit of moving really sharply for no apparent reason and stopping you out. Got news for you. Get used to it. It's going to happen to you. It will continue to happen to me, particularly in these markets nowadays. But if you time your trade to a comfortable level, or a level that you're comfortable with, then hopefully you'll be able to keep your losses low and run your profits high.
Fantastic. I love the honesty of that response. Thank you, Michael. Now, can you share with us some of your investing/trading successes? And also, you touched earlier about the greatest lessons you learned was from your failures or failings. So can you share some of that for and educate our listeners, please?
Yeah, I mean, you're asking me to really delve into the memory banks now. I think one of my most traumatic days as a trader was back in the 1990s, and I was running the dollar yen book, and I was doing really well. I was about 25 grand up on the day, 10 o'clock in the morning, and the market had been flying about a bit. And the corporate desk basically left an order on my desk, but I was plugged into a broker line at the time, and I wasn't aware they'd given it to me. And it was an order for $70 million in dollar yen, which I had to execute on a JAP method basis. I won't go into the logistics of what JAP method means or Japanese method means, but ultimately it meant that I was $70 long at the top of the market, and the market was falling very, very sharply. So from being $25,000 up, I was about $250,000 down on the day and getting bigger. And yeah, I was looking at my P&L sheet, looking at the market, chief dealer, one shoulder, head of the desk, the other shoulder. What are we going to do with this, Michael? And all I can see is my P45 in front of me. And the bank had limits, and basically you weren't allowed to run a loss for more than $300,000 loss. And we were now looking at $450,000 because the market was still falling. And so he said, you've got to get out of some of this. You know, unfortunately, I'd been long about 25, $10, $15 at the time. So I was only about $50 short, $50 million short, but I was still brutal on my insides. And I was sweating. But I also felt that the move was overdone. And all the while this was going on, I was arguing the toss with the chief dealer. I don't want to cut this position. I don't want to cut this, but yeah, but it's costing the bank $400,000. He said, yeah, but if you cut some of the position now, you're going to destroy my average even further, because it's going to basically put me short at such a ridiculous rate that you're essentially locking in a loss. You know, and a loss is only ever realized when you get out of it. Well, you said, Michael, we can't run it overnight. I said, no, I know, but it's midday. You know, I think we've got time. So anyway, I mean, they made me, the market started to rebound, and I pushed back, but they made me cut all of about $10 of it. And that put me in a lot, that put me in long. I can't remember the rate, but about 200 points higher from where I was at the moment. So I just sat there for the rest of the day, traded around it, finished the day $5,000 down. And even though I lost money that day, that was one of my biggest successes. Why? Because I pushed back against traders who are much more experienced than I was and said, I don't think this market has got much further to go. We should not be cutting this position. And guess what? I was right. I was also mentally exhausted, mentally spent, went down the pub that night, got totally wrecked. And do you know what they did? When I went to the loo, I came back, they'd all gone home.
Oh dear.
I thought I was about to swear then, but yeah.
Yeah.
So yeah.
Oh,
so there was me basically in the golden fleece at the time. And where have they gone? Oh yeah, they've gone, mate. They said that you're being obnoxious. And I'm thinking that doesn't sound like me.
You're celebrating a win and survive.
I was celebrating a survival day. So yeah.
Brilliant.
So
Brilliant.
yeah, that was a story. But yeah, I could tell you some stories. There's another story. It was kicking off on the Aussie desk. We were getting calls, selling loads of Aussie. We'd all been out the night before on a heavy night. We weren't at our best, shall we say. And the chief dealer was standing there, and I think the Aussie book was about $250,000 in the red. And everyone was shouting prices, this, that, and the other. Noise was deafening. And the guy who was basically logging all the positions and the deals was looking greener and greener and greener and greener. And then suddenly in the middle of it all, he just grabs the bin, picks it up, throws up in it, puts it down and carries on. And the chief dealer looked at the head of the desk and went, that is disgusting. He goes, what's you on about? He's doing his job, isn't he?
Oh my days. Thank you for sharing that. Listen, I'm conscious of the time. I've got two quick fire questions for you. You've spoken about and written about extensively, I believe, probably more so than most traders, Michael, the importance of psychology. You've touched on it a little bit there in some of your replies to me. Could you just expand a little bit for me about the importance of psychology? Because sometimes it's not the market that beats us, it's ourselves, I believe.
Yeah, you have to learn to trust your experience and learn to trust your instincts. One of the biggest mistakes I made when I was learning and, very young, was that I listened to all of these really experienced guys, and they were really experienced guys, and they were sort of saying, "Oh, I think this is going to do this, and I think this is going to do that," and I'm thinking, "Wow," but because you defer to that greater experience, think, oh, "Okay, all right, I won't do that," and I don't do it, and I'm proved right. And the thing is, life is a learning curve. You're not going to get everything right. You are going to get things wrong. So I think the most important thing and lesson that I learned was to trust your instincts. If you feel that something strongly enough and you can articulate a trading plan for it, go with it. It may not always succeed, but more often than not, it probably will. And that for me, believe in yourself. I really struggled that when I was younger, self-esteem and what have you. But learn to trust your instincts, because by and large, as long as you manage your risk carefully, they won't let you down.
Brilliant. I love that response. I've got one final very quick question for you, Michael. For the sake of all investors and traders, what would you change about the parameters of the markets right now to engender their long-term success?
Oh, gosh, that's almost an unanswerable question. I think I think you just have to take the markets as they are. I think it's almost a waste of, I don't know. It almost feels like you're trying to move the goalposts when you ask a question like that, and I don't think you can. The markets are just too big. They're too homogenous. Is that the word?
Yeah.
To really change, they are what they are, and ultimately you just do the best that you can. And as long as at the end of the day you can look yourself in the mirror and say, well, I've done the best that I could today. The market wasn't my friend. It wasn't the market's fault that I made the money, or lost money. The market is the market. The only reason that I lost money today was because I got it wrong. And at the end of the day, you will, and the most successful traders and investors understand that and come to accept it. Yeah, put that trade behind you. It was bad, it's gone. They're like London buses. Another trade will come along in a minute, and hopefully it'll be a better experience for you. But, perseverance, there's no substitution for perseverance and hard work and self-analysis.
I think that's a perfect answer, Michael. Thank you ever so much. Ladies and gents, that was Michael Hewson, Chief Market Analyst at CMC Markets. Michael, thank you ever so much for sharing your insights, 30-odd years of experience for our Investing Matters listeners. And I look forward to speaking to you soon and visiting you at your office, hopefully.
Thank you very much, Peter. And just remember that you're always learning. I'm still learning even now. Never think that you've got it cracked, because you don't. You don't.
That's one of my mantras. Thank you ever so much for sharing with us. Thank you, Michael. Take care.
Thanks, Peter.
God bless you.
Thank you. Bye-bye.
Thank you for taking the time to listen to Investing Matters. Be sure to check out the London South East website for free tools and info to research your next investment. You can also join in the conversation on our social media channels. And don't forget to subscribe to our YouTube channel for more content, including our CEO interviews. Catch you next time.